Good morning, as Nick said, and welcome. Happy Monday. I would think that most of you, maybe like me, are glad to see the sun. And what I love is on the start of a new week, I get to now start a new week of what the blessings are going to be. And these last 8 weeks, 9 weeks, whatever it's been, there have been a lot of things that have been very trying. And so what we've done at our household is make sure we spend as much time on the, as we call the highs of the day or the blessings of the day. So I will ask each of you to try to do that this week and make your week a great one with all the blessings that we do still get each and every day. On behalf of the partners at Boyum Barenscheer, I would like to welcome and thank each and every one of you for joining us for this 1-hour presentation on nonprofits, help in weathering a pandemic, and then we'll finish with the Q&A section at the end. We usually do about a half hour for that. And so I would like to be able to present our team that we have together for you on the COVID-19 issues. So first I need to go over a quick disclaimer on information that we give is really just guidance for you. And first off, for those of you who don't know me, I am Stacy Shaw, partner here in our business advisory and client accounting services with great passion for helping businesses learn and understand more. And this time has been the easiest time to be able to help and guide and give back. So I'm glad to be able to do that again today. And next on our group is Anna Lovegren. And I'm sure most of you have seen her, know her. She is the one who guides us through our nonprofit area and is here to help and give back. And you'll see she joined me here because I'm going to have her speak real quick. She had a great idea for each and every one of you to help you through this time. And then Nick Swedberg will actually give a little bit more introduction in the housekeeping. So Anna, can you share your great idea?
Sure, thanks, Stacy. And I just want to join Stacy in welcoming you all. We're so glad you can be with us today. And this is my webinar debut, so go easy on me. We wanted to add a little fun twist to the webinar today since we have a bunch of great nonprofits on with us. We want, besides the normal questions that you can ask through the Q&A, we want you to, you're welcome to request a shout out. So, and this could be as simple as, greetings from XYZ organization, or if you want, you can plug a current event you have going, or maybe an event you have coming up, or a fundraising campaign. Keep it brief, but we'd love to be able to help you plug your events. So back to you, Stacy.
Thank you, Anna. It's been great to have you on the team. And next we have Tiffany Shermak, a senior manager also in our audit group, who has great passion to be here to help you and learn as much as we've been able to in the last few weeks on the new law. So we'll be excited to have Tiffany go over details for you as it relates to the programs out there for you. And then Barb Sawdy is a business advisory services partner with me, and it's been great to have her on the COVID-19 team because she brings in the payroll and unemployment side of this, so she'll have great information to share as well. And then two that don't have the slides will be, I'll hand it over to Nick soon, but I wanted Larry, will you turn your video on for us? He's going to be behind the scenes and giving you guys as many answers as he can as you put in Q&A, because we found that with the half hour at the end, we don't always have as much time as we want. So thank you, Larry, for being here. And then Nick is our MC. So he's going to talk about the housekeeping items as well as going into the agenda. So Nick, thank you for your time today.
Awesome. Thank you so much, Stacy, and thank you again, everybody, for joining our webinar. Just a very quick housekeeping item is that we do at the bottom of Zoom, there's a Q&A. If you click on it's two little chat bubbles, there's a Q&A section and you can ask questions here where, like Stacy mentioned, Larry and I are going to do our best to keep up. We'll answer a few of them if they're extremely specific, and a lot of them we're going to broadcast just to the full group at the end. And this is also where you can do the shout outs that Anna mentioned, and we'll be answering those and delivering a lot of those live. So very quickly on the agenda here, you'll see we're going to initially touch on the tax filing deadlines for nonprofits. We just could not resist kicking off with a little bit of tax stuff because that's what some of us love. Next, we're going to go over some very specific areas for nonprofits related to the COVID-19 relief, starting off with the very infamous PPP loans. Then we're going to kick into some payroll and employment-related tax credits. Then some accounting for the relief and compliance regulations, which we all have to deal with. And then lastly, we're going to wrap up with some other IRS topics and give you a few tools for success. Then we're going to end with a Q&A. And like Stacy mentioned, it's an hour long actual presentation, and then 30 minutes reserved at the end for Q&A. So hopefully you can stay with us as long as you can. And so I'm going to kick off to Anna.
Thank you, Nick. The first topic is a fairly easy one that we'd like to start out with. So just want to make sure everyone knows about the tax filing deadlines that have been extended and those that haven't. So the IRS has basically extended everything until July 15th. So the biggest deadline is coming up here on Friday, May 15th for the calendar year end nonprofits. So that deadline is now July 15th, and this is 990s, 990 EZs, 990 Ns, 990 PFs, 990 Ts. So pretty much everything. And a key point is that does include those that have already been extended. So we still have some June 30th, 2019 nonprofits that have not filed yet. And that's the second most common year end, especially for nonprofits. And so the IRS did include them. So that's great. They have 2 more months to file for the IRS. Minnesota Attorney General, they did an automatic 4-month extension, which really just follows their normal extension timeline. So this isn't anything huge or anything new, just that you don't have to actually ask for it. It's an automatic extension. But a very key point is they did not include those already extended. So those June 30th year ends that have their 2019 filings open still, they have 2 more months for the IRS, but not for Minnesota. So those are due on Friday. And then just one other point, this does not apply to the charitable trust filings. This is the charitable organization annual reports. For now, back to, actually, I think we're turning it over to Tiffany.
Great, thanks, Anna, and good almost afternoon, everybody. Thanks for joining us. I'd like to welcome you along with all the other welcomes that we've had so far today. I'm going to be covering primarily the Paycheck Protection Program. Right now, we're just going to kind of touch on the EIDL, or I'm going to call it the EIDL. That's the Economic Injury Disaster Loan Program. That's a program the SBA is providing. I'm not going to spend a lot of time on that just because it's really not doing much right now. So some of you have received your EIDL advance funds, so that's great. If you received that and have not heard anything for the next step in the EIDL loan process, the SBA should be communicating with you at some point. What we know is that as of April 15th, any applicants that were in the system, the SBA should be getting back to, but once the funds are dry, they're not going to continue processing those. And right now, the second round of funding had come out. Congress allocated $50 billion to the EIDL loan program and another $10 billion to the EIDL emergency advances. What we're hearing is SBA is currently prioritizing agriculture businesses for those loans, so not so much the other types of entities. Just high level, nonprofits are eligible for both the EIDL and the PPP if you're a 501c3. Now the EIDL also, in addition to 501c3s, includes the 501c4s and the C6s, and then religious and faith-based organizations qualify for both. So just to kind of highlight some of the similarities and differences in terms of eligibility for this. I would also note, it's not on the slide, but SBA did come out with information about the average grant amount under the EIDL, that emergency advance. And on the advance piece, as of May 8th, I believe it was, which was just Friday, the average advance is around $3,000, just to give you an idea. And then for those that have been funded for the loan, that average is about $200,000 on a national level. In Minnesota, the average loan is running about $233,000. That's the full loan. All right, so now we're going to kick it more into PPP. Some of these slides I'm going to move pretty quickly through, assuming that we're somewhat familiar with PPP. It's been out for a little while now, and we're not going to cover so much of the basics. We're going to kind of jump ahead and do PPP 201, if you will, instead of 101. So just to give us kind of an idea of where we've been, March 27th, The president signed into law the CARES Act, which brought about the PPP. On April 3rd, banks began accepting applications for employers or business-based entities, including nonprofits. April 10th was the first date that self-employed and independent contractors could apply. By April 16th, that first round of PPP funding of $349 billion was dry, it was gone. The average loan for that first round was $206,000, and 74% of the loans were under $150,000. And then April 24th, Congress approved the second round, which was $250 billion for this PPP. And then on the 27th of April, SBA said, all right, we're open back up. We'll start taking those applications from lenders again. As of May 3rd, Treasury reported an average loan of $79,000, and 71% of those loans were under 50 grand. So we're seeing those average loans start to come down in amount, they're less. So that would be indicative of those self-employeds getting in on it and really meeting the need of the smaller organizations and smaller businesses. May 11th today, we're now a month and a half into the program. It's hard to believe. All right, so eligibility, we're gonna just go real quickly on eligibility because these rules have been out for quite a while. I'm just gonna highlight that the SBA affiliation rules do apply for nonprofits. That's usually looked at as common control. So if you're in that situation and you're looking to apply, just make sure that you look into that and vet that and make sure that you understand what entities you need to consider in applying to meet that 500 employee head count. And then religious organizations actually had, SBA came out with an FAQ specific to religious organizations, really exempting them from the affiliation rules based on their affiliation for religious beliefs. One thing I will note at the very bottom, we've got a bullet point around the certifications. So certifications have really expanded greatly since this program has come out, and they've expanded those certifications through the Treasury's FAQs. So as I talk about PPP today, I'm really going to spend the most time on two areas of PPP, and that is the certifications and then the forgiveness piece. So the certifications, on April 23rd, Treasury released FAQ 31. So that was just to remind borrowers that when you applied for the loan, you're certified to a couple things. There were several things, but these two stand out in terms of what we're going to expand on and talk about more. That there needs to be current economic uncertainty. So as you apply for the loan, you're saying, yes, there's current economic uncertainty in my organization. And then you also certified that the funds will be used to retain workers and maintain payroll, which is in the spirit of the law around Paycheck Protection Program. Then FAQ 31 goes on to say it expands and makes that threshold for certifying just a little bit more difficult in expanding, saying that your current business activity, you need to consider your current business activity, take that into account as you certify that you need the loan. You also need to look at your ability to access other sources of liquidity sufficient to support your business operations, such that it's not detrimental to the business. So these really came about, you know, a lot has happened, but around April 23rd, before April 23rd, a lot hit the press. A lot of scrutiny was around the large publicly held businesses getting these PPP loans. You know, the LA Lakers got one, Shake Shack, Ruth Chris. They have since returned that money, but some of these FAQs are really in response to that activity, making sure that these loans are getting in the hands of smaller entities. FAQ 31 then also went on to say that if you got your PPP funding before April 23rd and now need to reconsider your certification that in good faith you're saying you need the loan, they then gave you until May 7th to make that decision and determination to actually return the funds. A subsequent FAQ has come out to actually extend that deadline to May 14th. So that's this Thursday. So if you've got your PPP funding and you need to consider those certifications, you have until the 14th. The SBA has said that more guidance will be forthcoming around the certification. We're waiting to see that. So if you're in that position right now, we say just hold tight to really see what else SBA comes out with. Now, if you've got the loan and you feel completely comfortable that you can certify to those new thresholds, then you're fine. Keep the money and keep moving on with PPP. Couple other things that came out April 28th, an FAQ came out that indicated that yes, these new thresholds apply to all companies, not just those large publicly held ones that did qualify for PPP. And then April 29th, Treasury came out with another FAQ announcing that loans over $2 million and others as appropriate will be subject to SBA audit. SBA has not released information about what the audit will look like. We don't know if SBA will come in and look at the certification and eligibility process. They may look at those factors that weighed in for you to determine whether you're eligible. But they also, we do think they'll spend quite a bit of time on that forgiveness piece, which we'll get to, where you're going to be indicating or proving that you spent the PPP loan funds on the right expenses. So, and as I mentioned before, FAQ 43 did extend your deadline to return any funds by May 14th if you don't feel you can certify in good faith that you needed the loan. So there was a lot that happened in the last even 2 to 3 weeks around these certifications. You know, you might be looking at your own entity situation, your own organization situation, and wondering, like, what does this mean? I think though for this, Anna, maybe would you mind coming in and joining? And Anna's gonna talk about what can we do in this situation.
Yeah, thanks, Tiffany. So we are suggesting that you create what we're calling an impact statement. And we're suggesting this for really everyone. It might be, you might want to get more detailed if you're a little bit more risky as far as if you should return that money or not, or just if your story might look a little more questionable. But really, we think everyone should go through this. It's just good documentation of your story at the time you applied and how things are going now. So yeah, so document your organization situation at the time you applied, and you really are trying to demonstrate your need for the loan. This should include both quantitative and qualitative aspects. You're trying to tell the story. You might want to consult with legal counsel, especially if you're kind of in that more unsure area. Feel free to reach out to us as well. In the end, it is your decision, of course, but we're happy to talk it through with you or look at what your documentation is and give you suggestions. So examples of factors to include in your impact statement, and I will point out that we did a fairly lengthy blog where we put a lot more details in it in the last couple of days, so that is out on our website. So feel free to take a look at that, but just kind of a summary of some of the things that you should consider for your impact statement is how has the stay-at-home or shelter-in-place orders, how is that affecting you? Have you needed to adjust your workforce, done some layoffs or furloughs? Quantify your current and anticipated changes in revenues and expenses. This could be things like if you have an event, spring is such a common time of year for events. So has your event been canceled, postponed, repurposed to a virtual event, whatever that might be? Update your budgets and cash forecasts to include with that narrative. Liquidity is really a big issue and an important issue, as that FAQ 31 came out and basically stated liquidity could be an issue if you have too much liquidity, and this one is definitely getting a lot of press as well. So make sure you're covering that, go into detail about what it looks like you have for liquidity, and then what limitations or restrictions you might have on your assets. So in particular for nonprofits, this is endowment funds, and there are nonprofits and private schools kind of getting picked on for their large endowments, so why would they need a PPP loan? But in a lot of cases, that's donor restricted money. Big chunks of that is often permanently restricted, so you really can't use that. That has to remain in perpetuity. And then there's often temporary restrictions as well, which you need to use for the donor specified purpose or time. So it's not, you have to help tell your picture, because it's not always what it might first appear. Anything to add to that, Tiffany?
No, I think that sounds great, Anna. Thanks.
Okay.
And as Anna said, we are here to help just kind of troubleshoot or think through the different scenarios that you might consider for that impact statement. All right, so now we're going to move into the forgiveness piece of PPP. Again, here's another slide with some basic background information on what your allowable uses are of your PPP funds. What I want to point out under payroll costs, somewhat unique to nonprofits or at least religious organizations, is including housing allowance. So for those organizations that do compensate anyone with a housing allowance, that is includable in the compensation. I'm not going to cover this slide. We will post slides on our website within 24 hours, and you can access those so that you can come back and reference what the different uses might be or any of the information in our slides for today. All right, so as we move on, then in the forgiveness process, you have your allowable costs that were on the prior slide. You're going to want to make sure that you keep documentation that relates to all of those allowable costs. Even, there's some non-payroll allowable costs. Those in particular, you're going to want to make sure you maintain records of incurring those obligations before February 15th. So for example, those non-payroll costs include rent, might include mortgage interest, they include utilities. So being able to provide evidence that you were obligated in those arrangements prior to February 15th will be part of what you submit for forgiveness to the bank at the end. When it's time, once you've been funded with your loan, your 8-week covered period clock starts, and you have those 8 weeks then to spend on those allowable costs. At the end of the 8 weeks, you'll be pulling together your forgiveness application packet. And at this point, we don't know exactly what that'll look like. Again, the SBA is yet to come out with more information. And then once they do, hopefully you'll have all the documentation you need that you can just attach as support as a part of that application to submit for the forgiveness. With the forgiveness, as I said, SBA is yet to come out with more guidance. So there are a lot of uncertainties around the forgiveness and exactly how they're going to actually look, or the lenders are going to have to first look at what you are applying for or presenting to them for forgiveness. So there's a lot of ambiguity. So today, though, I'll try to point out some of the assumptions that we are making as we move through that would be subject to change still. But actually, everything around forgiveness could be subject to change as the SBA comes out with new rules and regulations for us. But as the law exists now, there are several limitations around forgiveness. So what I've done is I've tried to divide it down or simplify it down into 4 limitations that come into play with PPP. Some of them do interact with each other, but then they're also measured independent of each other. And each of these limitations can impact how much of your total loan you might have forgiven. So the very first one is those allowable uses, the costs that I covered on a couple slides ago. To the extent you use your PPP loan proceeds for those allowable uses during the 8 weeks, that's the maximum amount that you can have forgiven. So let's say you had a loan for $500,000. You were able to use during the 8 weeks $400,000, then your maximum forgiveness is limited to $400,000. The second limitation is, did you use at least 75% on payroll costs? Now, the regs do reference this a couple different places, and they say it a little differently. So what the regs actually say, which is asterisks down below, the regs indicate that there's a limit of no more than 25% of the forgivable portion to be used for non-payroll costs. So we can take that to mean that 75% or more needs to be, of the forgivable portion, needs to be used towards payroll. Now, back up in number 2, I do note that 75% of allowable costs or forgivable portion. As you spend your loan proceeds, those could be 2 different amounts, and that's what we're hoping SBA will give a little more guidance. Are we looking at 75% of the total allowable cost that you spend, or are we looking at 75% of really truly what's forgivable, which could be your allowable costs could be limited by my next 2 limitations to get to the forgivable portion. So depending on how you order those or calculate in what order you take these limitations, you could come up with different results. So we're hoping SBA provides some guidance around that. In another part of the regs though, SBA goes on though to indicate that 75% of the loan proceeds are to be used for payroll costs. So again, they're kind of throwing another baseline pot of money at us to be calculating this 75-25 on. So there is some confusion and ambiguity. If you're running scenarios for your forgiveness and you have these questions, check with your bank too, if the lenders, because ultimately it will come down to the lenders and what they're looking at. So the lenders might be able to give some insight too as to what they're hearing or seeing from the SBA. After I go through these limitations, I will lay out a scenario for you and we can walk through, which is something we do recommend that you do as you move through at the various stages of this PPP process. But we'll get through the limitations first and then we'll jump to those scenarios or examples. So the next limitation revolves around your FTE count. So you need to see, am I reducing the full-time equivalent during my 8-week period as compared to the base period? And that base period is a pre-COVID base period. So the law provides for a couple different time frames to be looked at in evaluating whether or not you had an increase or decrease in FTE. So the goal of the law is to make sure that any reductions that happened as a result of COVID-19 can be restored by being able to have a PPP loan to use to hire staff back or just keep them on at full capacity. But there will be reduction to the extent that the headcount is reduced. So an example would be if you had 90% of your headcount back during your 8-week period, then at most 90% of any amounts spent on allowable uses would be eligible for forgiveness. The next limitation is around salaries or wages. So it's the wage reduction limitation. And that's for any employees making on an annualized basis less than $100,000, you need to evaluate whether their salaries or wages were reduced more than 25% during the 8-week period as compared to a prior period, which the law says the prior full quarter, which again can be a little unclear. Is that a calendar quarter or is it just any 3 months prior to when you applied for the loan? We're taking it to mean that it's the first quarter of 2020. So if you look at what someone's wage or salary rate is during that quarter and compare their rate to the 8-week period, if you reduced their wages by more than 25%, then you'll have a further limitation or reduction in forgiveness. Now there is an exception noted at the bottom to these two limits, that if you have reductions in headcount or wages, and those reductions happened between February 15th and April 26th, if you restore one or both of those areas, then you are eligible to have any forgiveness that was reduced restored. So if you restore your headcount by June, and those restorations happen before June 30th. So if you restore your headcount by June 30th, along with wages and salaries by June 30th for those employees that had the reduction, then anything that decreased your forgiveness amount then is wiped away. It's not a one, so if you restored your headcount, but you didn't restore those wages, you still are subject to the reduction for the wages, but not for the headcount. So those kind of work independently in terms of the restoration. You need to restore both in order to maximize the forgiveness for those. So as you can see, these limitations get a little complicated and can get a little involved depending on your particular situation. And we do advise that you go through scenarios and try to calculate run the different scenarios that you might have at various times during your 8-week period. So if you have your PPP loan funding and you've been spending the money on allowable costs, kind of check in and see where you're at for spending to see if you need to change anything or make any different decisions as you move ahead during the 8 weeks. Probably about midpoint at 4 weeks is a good time to do that. And then again, obviously at the end, you'll be pulling it all back together. And we do have a calculator on our website that can help you out with that, and you can use that as a tool. We'll have a link towards the end in our slides to point you to that. So there are, as I said, SBA is bringing out more guidance for us. And what we're waiting for further guidance on, probably the top concern on most people's minds if you have a PPP loan, has been what do they mean when they say costs incurred and payments made during the covered period? So the law is pretty specific, saying that allowable uses must relate to costs incurred and payments made. So that can get pretty difficult to meet that standard when you think about your payroll. Let's say your loan funded on May 1st. Let's say you had a pay period that paid on Friday, May 8th for the prior 2 weeks. Well, then you have 1 week within your loan, your covered period, your 8-week period, but then you have 1 week outside of that period. So based on the law now, you'd only be able to take 1 week. And then it begs the question, what happens at the end of the 8 weeks? I'm likely going to have part of a pay period falling out of my 8 weeks at the end. What do I do there? So what we're recommending is just make sure you do capture 8 weeks of payroll, and you might need to kind of accelerate a payroll at the end of the 8 weeks and pay it early for work that has already happened. You know, the cost incurred related to those employees for that time frame. You might need to accelerate and make a payroll early is what we're thinking right now based on what we know from the SBA. The other thing to consider with this is your loan amount was calculated based on a monthly average of payroll costs. And you took 2.5 times that monthly average. So you took 2 times the monthly average to cover payroll. The other half that they gave you in that loan calculation was to be allowed for non-payroll costs. So the 2 months included in your loan amount covers roughly, you know, maybe 61 days if you had a 30-day and a 31-day month. So you were allowed to have a loan based on a 61-day period. But now when we spend the loan, we only have 8 weeks or 56 days to spend it. So we're, you know, as we run scenarios through with clients, we are seeing that just about any way you cut it, if you had no change in business and you're able to keep your staff on and fully comped at what they had been, you're still going to come short from being able to spend everything just because of the difference in the days of the different periods that they use to calculate the loan amount as opposed to your spending time frame now. So hopefully, again, SBA will clarify that, and maybe they'll come out with something, we don't know, to clear that up and just reassure borrowers as to what will happen kind of with that difference. Also, we're waiting for some guidance on, as I mentioned before, those limitations. How does the 25-75 limitation come into play? Does it come into play right up front when we know what our allowable cost bucket is? Can we look at our allowable costs for the 8 weeks and then say, all right, 75%, yes, I did spend on payroll, or do I need to first stop and look at what my FTE reductions were and my wage reductions were and how that impacts my forgivable amount, and then look at the forgivable portion, is it 75-25? Because it could come up with a different result. So that's a little unclear. We need some clarity around FTEs. Conventional wisdom, though, out there right now is to use a 30-hour week in calculating what your FTEs are. I do have a reg section there. That's an IRS reg section that does go into detail of how to calculate FTE, and they use a 30-hour base. And then also with FTEs, you know, we have some non-COVID related terminations with employees. Maybe they went and they found a different job. Maybe it was part of our business plan anyway. How does that impact this reduction related to FTEs? Do we need to still rehire back to our prior level? Right now, that's what we are advising, is if it was a non-COVID voluntary or involuntary employment termination, that you do need to rehire or restore back to that head count. We do know now, based on this FAQ 40 that came out May 3rd, that employees, if they're on unemployment, they've been laid off by you, if you extend a written offer for them to return to employment and they say no, that will not count against you in your FTE calculation, but you do need written documentation that the offer was extended. And then you also need to be able to prove that the employee declined it. All right, so we're gonna get into the good stuff. We have a scenario, and I'm gonna run through, it's the same organization that we're gonna use, facts and circumstances for the same organization. And we're gonna have 3 different scenarios that could play out with this organization during their 8 weeks. So we have not-for-profit XYZ. They have 9 employees, 7 were full-time, 2 were part-time, each were a half FTE each. So we have a total of 8 FTEs. Their PPP loan was funded for $100,000 on May 1st. Now the first scenario, we're going to assume that nothing changed. They were able to keep all their employees staffed, and they were able to do that because they had a little bit of excess cash that the organization could go to make sure its workforce could stay employed and paid at their equal compensation to what they had been paid. So even at that, we can see in the language here that the organization spent $73,330 for the 8-week covered period on payroll costs. And that's as compared to $75,000 for a 2-month period. So that shows the difference between that 2 months and the 8 weeks. Non-payroll costs were $25,000, which will be limited because they exceed 25% of forgivable costs. So the total amount spent of the loan proceeds was $98,333. The maximum forgiveness due to the amount spent on payroll is $97,777, leaving a loan amount to be repaid of $2,223. So you can see if you just let everything stay as is, you still don't achieve maximum forgiveness of that total loan proceed amount. Now we're going to assume same organization, only they had to cut hours and wages. So they cut the hours and wages of 4 full-time employees, and they just cut it in half, so 50%. That was effective through May 31st, so for 1 full month. And then hours and wages were fully restored on June 1st. So let's see what happens. So what happens then, $65,000 are spent on payroll costs for the 8 weeks. Non-payroll costs are still $25,000, but they are subject and limited by the 25% of forgivable costs. There are no reductions due to the FTE or wage limits because restoration was achieved by June 30th. So the total amount spent was $90,000. The maximum forgiveness due to the amount spent on payroll is $86,000, and the amount to be repaid is $14,000. Now, one last scenario. We're going to assume that they cut 1 full-time equivalent or furloughed 1 full-time equivalent and then cut hours for 2 others in half. So FTEs are the same as the previous example, only the difference in this example is the furloughed person they will restore and bring back by June 30th, but the 2 full-time employees that they cut back to half-time, they just didn't have enough work for. So the organization is not bringing back the 2 that they had to reduce hour and wages to. They'll just keep them at 50%. So if they're kept at 50%, what happens is the total amount spent is $85,000. Payroll was $60,000 of that 85. So total amount spent of $85,000, but of that, only $63,000 is eligible for forgiveness. Even though you had $85,000 on allowable uses, due to the limitations of that FTE count and restoring of the wages not having been met, then only $63,000 is forgivable, and the amount of the loan becomes $37,000. So just to kind of give you an idea of how those different scenarios might run. All right, so we've talked through certifications and some different scenarios with that forgiveness, different limitations with the forgiveness. Now, what do I do? So if you've applied for PPP and you're comfortable with your certifications, just keep moving on. Carefully track the use of your PPP funds, but we do still recommend create an impact statement so you have that for your records. If you applied for PPP and you're not sure you're comfortable with the certifications, start work on that impact statement if you haven't already, and then reach out to others. Don't do it alone. Reach out to a finance committee, your board, an attorney, CPA, bankers, maybe other not-for-profits in the same or similar situation to kind of get an idea of how others are handling that process. Now, if you've not applied and you want to, get your application ready and document that impact statement. and then find a lender who is processing. There are some lenders who are not processing PPP anymore, but find one that is. Now back to that EIDL we talked about in the beginning, it still could potentially be an option for a source of funding for you if you applied before April 15th. Pull together documents for the full application process, and the SBA website has that information. It's typically tax returns, years of financials, just documentation about the organization so that you're ready in the time that they contact you, and in case they contact you and are ready to move ahead. If you've not yet applied and you think EIDL seems to make sense, watch SBA.gov for if and when they open those applications back up. As I said before, right now they're not. Some might be hearing a buzz around the Main Street Lending Program. That is a new lending program through the Federal Reserve that Congress is looking into offering and that the government is working on. It's currently not open for nonprofits. The Fed has acknowledged that, the board has acknowledged that, and they understand that. And what we hear is that they're evaluating what the options might be for them to meet the needs of nonprofits, because they do acknowledge that there is a need. So with that though, you've got the PPP loans available, that funding, but maybe that's not the route that you want to go. We do have some other ideas for you. So I'm going to kick it over to Barb, who's going to let us know from an employment perspective what kind of options there might be.
Good afternoon. So there's been so much focus, I think, on the PPP, and the employee retention credit is an option that has really not been getting much traction. I think that people, especially with the certifications that have been coming out regarding the PPP and the necessity of it, that this is maybe getting a second look. This is not available to any employers who take out a PPP loan. If they were approved and they return it before the safe harbor date, they can still be eligible for the employee retention credit. This is a refundable credit against employment taxes for each quarter where you qualify, meet the qualifications. So up to $10,000 of employee payroll costs, which can include qualified health plan expenses, up to $5,000 maximum credit per employee. Payroll tax deposits can be adjusted based on a reasonably expected credit allowance. And Form 7200 has come out where you can complete and get an advance payment of the credit if that is, if your payroll tax deposits aren't sufficient to get the full credit and to help with the cash flow. So eligible employers include the nonprofits. You had to have been carrying on a trade or business, fully or partially suspended operations during a calendar quarter in 2020, had a significant decline in gross receipts during the quarter as another qualifier. If you had more than 100 full-time employees, it can only be used if you're paying an employee who is not providing services. For employers with less than 100 full-time employees, it's any wage that hits during the period of the economic hardship. This goes from wages paid after March 12th, 2020 and before January 31st, 2021. So it is in effect in part for first quarter of this year through the rest of the year. Unfortunately though, the definition of significant decline in gross receipts qualifier for nonprofits is awaiting further guidance from the IRS. So it makes it very difficult to decide on a course of what's better when you really, as a nonprofit, don't know what they're going to use as that gross receipts test. For the for the regular businesses that are not nonprofits, they're saying a 50%, less than 50% of the comparable quarter from last year. So hopefully they'll come out with that guidance on what is a gross receipts qualifier for the nonprofit area. So many nonprofits do the self-insured. That would be, when you're not paying the state unemployment tax directly to Minnesota. So Minnesota is still awaiting instructions on how the federal government financial relief would work. The CARES Act allowed for 50% federal reimbursement for unemployment costs. The Unemployment Department of Labor notice required employers to pay their bill in full before the reimbursement can be processed, which could create a definite financial hardship So the National Council of Nonprofits and others are seeking to change that so that you aren't having to pay 100% of any assessments to your UI account before you can get that 50% reimbursement. So more to come in that area. The employer payroll tax deferral is another option just for cash flow purposes. It applies to the employer portion of Social Security tax, so that's 6.2%. Payroll taxes can be deferred that are incurred from March 27th, 2020 through December 31st of this year. Repayment dates are 50% due on or before 12/31 of 2021. The remainder is due on or before 12/31 of 2022. You can do the deferral if you have a PPP loan. However, you cannot defer any payment of the payroll taxes after the loan forgiveness periods. So if you were to defer some of those taxes up until the forgiveness, you'd follow those same due dates as they are stated above. I wanted to also touch on the Families First safe and sick leave, because I think that there's still confusion in that area about who qualifies and under what circumstances. So this expanded the FMLA to employers with less than 500 employees, where in the past, FMLA only applied to employers with 50 or more. So they are allowing now the being unable to work or telework due to the need to care for children if the school or daycare is closed due to the public health emergency. And of course, COVID-19, as we all know, has been declared a public health emergency. And although it does exempt small businesses with less than 50 employees when the requirement would jeopardize the viability of the business as a going concern. There again, there's some limited guidance available. If you think that that should apply, it's probably something that we should be talking to you on a one-on-one. So this became effective April 1st of 2020, and it goes through the rest of this calendar year. So under the Paid Sick Leave Act, up to 80 hours of paid sick leave is available for immediate use that's applied against payroll taxes and refundable. It can't be more than 511 per day or 5,110 for the following. The employees under quarantine, they're under the advice of a healthcare professional to self-quarantine, or they're experiencing symptoms of COVID-19 and seeking a medical diagnosis. The questions that have been coming up around that are, what if my spouse has been advised to, or maybe a roommate has been exposed? It's really very specific. It has to be the employee themselves who is advised to be self-quarantined. Now there's a few other categories where they can qualify for this 2-week leave. This is limited to 200 per day or 2,000 total per employee in order for them to care for a family member due to quarantine or isolation order or recommendation from a healthcare professional. You're caring for a child whose school or daycare is closed, or you're experiencing substantially similar conditions as if the Health and Human Services should come out with something. Now, when you come into this area, what you have to be aware of in here is that the school or daycare, being closed, or some of these, or the caring for a family member needs to mean that they truly need your care, not just that they are being quarantined and that you are deciding to self-quarantine along with them. So this is the lesser of 67% of their employee wages, or $200 per day. There's an additional 10 weeks available for employees who have to care for a child if their school or daycare is closed or unavailable due to COVID-19. There again, that's a $200 per day, the 2/3 of their regular pay with that limitation as well. If you are an employer who had to provide FMLA in the past, this does come in with the limitations of the 12 weeks and 12-month limitations if they take some leave under this act. I think as the year goes on, I think we'll be continuing to see employees who will qualify under this, or until school lets out here for the summer, because obviously the school being closed will only be apply until school is actually considered to be in session. But it is important that you document these because these are, credits that you're receiving, and you want to be able to be sure to support those. So you need to document the name of the employee, the dates that they're requesting the leave, the reason, and a statement. The employee needs to sign a statement that they really are unable to work because of that reason. If it's under the advice of a healthcare provider, they need to provide you with the name of that healthcare professional. And if it's due to a school or daycare, they need to provide you with the name of the child, the name of the school that's closed, and a statement from the employee that no other suitable person is available to care for the child. So in that, you could have situations where maybe there's a parent, one is able to telework, the other has been furloughed. That person who is teleworking would not qualify because they have somebody else available. The spouse is on furlough and would be available in theory then to take care of the child. Our suggestion when it comes to accounting for these payroll tax credits is to record your payroll as usual as a start, but then to create some new accounts or negative or contra accounts to those expenses to record the credits. We want to be able to clearly identify these when it comes time to whether you're under audit or we're doing a tax return for you, that we'd like to be able to see what wage credits that you've received either under the Employee Retention Credit or the Safe and Sick Leave Act, the tax credits that you on the Social Security portion of your wages or Medicare in the case of the Safe and Sick Leave. And because some of these qualify as well for some of the employer health insurance, we'd also like you to record those so that we can identify how those credits were used and for which expense areas. So I think with that, we'll switch it as it go to, I think Anna's going to cover some of the additional reporting requirements for the loan itself.
Thank you, Barb. And before I go through a couple more slides, I see my idea for the shout outs kind of failed, so I'm just going to mention it one more time in case someone joined late. We'd love to do a shout out to you. Just put that in the Q&A and we'll do those live at the end during the Q&A session. And we'd love to plug an event for you. So if you have an upcoming event or a fundraising campaign, something like that, put it in the Q&A and we'd love to be able to help promote that for you a little bit to everyone that's on the webinar. So accounting for loan and loan forgiveness, I'm pretty much talking about the PPP loans here, but some of it would be a similar concept for the EIDL loans. The loan proceeds, as you get those, we really want you to put those in a separate bank account, and then you simply record that as debt at the time you get those. So that part's pretty easy. The expenses you also record as normal, so your payroll and your different expenses that are eligible for PPP. Record those as normal, but we do want you to track those closely and separately through your GL, like through a separate class or in a spreadsheet. And then as you spend that money, we're suggesting that you make transfers from your PPP bank account to your operating account as you spend it. The forgiveness, this piece is a little more tricky. Kind of the easiest way is, and the way that most current guidance is showing, would be recorded as revenue once it's forgiven. However, so June 30th year ends. If you're not a June 30th year end, you would just do recorded as revenue once it's forgiven. No big deal. It will all work itself out within your fiscal year. But as I mentioned before, June 30th is the second most common year ends for nonprofits. And so there's a lot of those coming up. And it's not very likely that your loan would be forgiven yet as of June 30th. Maybe there'll be a few lucky organizations that got in right away and that get through the forgiveness process quickly. But for the most part, your loan is still going to be there at year end. So most recent guidance does say, well, for nonprofits, you would follow ASU 2018-08 for GAAP, which means you consider these conditional grants. And the question is just then, when do they become unconditional and therefore the revenue recorded? So most guidance to date has shown that wouldn't be until it's actually forgiven, till the forgiveness is approved. Because at that point you would have not only released your barriers, you've kind of met your barriers, as that's the cost. As you've went along, you've spent that and you've met that part of the equation, but also the right of return. The right of return can arguably not happen until it's actually been approved. However, I will say that we did hear a conflicting view last week, and we're expecting some further guidance soon, which could possibly give some options to that. So stay tuned for that. Moving on to some really different subjects on regulatory compliance. We had been patiently awaiting news as to whether or not these loans will be subject to single audit. A single audit is basically a compliance audit that's in addition and separate from your financial statement audit, and is required when your total federal funds exceed $750,000 for the year. So we were very happy to hear that the SBA did, about a week ago, finally came out and said that PPP loans were not subject to single audit. And that was good news, because especially for churches, schools, some nonprofits that don't typically get a lot of other federal funds, so they've never been subject to a single audit before, it would have been, a fairly high burden for them. The SBA did say, though, that EIDL loans will be considered federal funds for single audit purposes. So, and again, that's just if all your federal funds, including your EIDL loan, exceed $750,000. Another compliance area is grant funds. So a lot of nonprofits do get grant funds that cover a lot of their employees, that basically reimburse for the payroll of their employees. So can you also get a PPP loan that covers those same payroll costs? So generally you can't. That would be double dipping, and most things in the law is that you can't double dip. We certainly do suggest that you talk to your grantors if they're permitting that, then that's fine. You're definitely not the only grantee, that's getting PPP funds. I mean, it's a very common program, so most grantors will have some sort of an answer on this. So just reach out to them. Are they willing to still cover those payroll costs if your PPP loan also does, or is there any leeway? Would they be willing to cover some other administrative costs for that 8-week period while your PPP loan covers your payroll costs? If there's no budging in any of those areas, we really do think you can't double dip. So then you should consider giving that portion of the payroll or of the PPP loan back if you're already through the application process and your loan includes that, or just hold it and just know it won't be forgiven. So you don't have to give it back immediately, but just know that piece won't be forgiven. If you're still in the application process, then we'd suggest that you, unless your grantors say otherwise, that you only apply for the PPP loan in amount that covers the employees that aren't otherwise covered by a grant already. So now kind of switching gears completely, we thought it would be good to cover a few other IRS topics. Part of the CARES Act that was passed did have some provisions for individual taxpayers that should benefit charitable organizations. There's a new $300 above the line tax deduction for charitable organizations. This, we're hoping, should help incentivize incentivize taxpayers who don't otherwise itemize deductions into giving some donations. When the 2017 tax laws changed all the rules around itemized deductions versus standard deduction, there's a lot less families that itemize deductions. So a lot more are able to take the standard deduction because it was increased significantly, almost double of what it had been in the past. So therefore, a lot of taxpayers aren't getting a tax benefit for donating So hopefully this helps incentivize them a little bit. Minnesota does have something similar too that they've had for quite a while, that even if you take the standard deduction on your federal return, Minnesota does give a benefit when you've donated over $500 to charities. And then a caveat, this is cash donations only, no stock, no household items, and it does not count if you contribute to a donor advised fund or private foundation. And then there's another provision, not so common, I would say, but just it should benefit taxpayers, which then benefits charitable organizations, and that is an increase in the thresholds. There's a limitation in the past that was 60%, so individuals could only contribute or could only deduct contributions up to 60% of their AGI. Well, now that's 100%. Moving on, a couple other IRS topics. A quick update to what's going on at the Exempt Organizations Division of the IRS. So the word that we've been hearing there is they've moved to a remote workforce like many others, and that they are just unable to offer much live assistance at all at this time. And the rumor is that everything being mailed to them is basically piling up in trailers, so they're not getting to the mail, and it'll just be waiting for them whenever they're able to open back up. So things are pretty behind for especially anything that's mailed in, and that could be your 1023 tax exempt applications, responses to IRS notices, manual 990 filings, if for anyone that's done it manually. But a little bit of good news, they're emailing with organizations for the first time. So normally the IRS does not email, and now they've started emailing. One other piece of good news is that they've said that there will be no new liens or levies for the time being anyway. So that's good news. It doesn't give relief for current liens or levies. One minor item, just want to kind of get the word out on, is the parking lot tax. This was a hot topic for the last couple of years, and it was a new tax that was created with the 2017 tax laws, and this has now been repealed for tax exempt organizations. So that's great. If you don't know what I'm talking about, well, you don't need to know it now, so don't worry. But for those who did pay in tax, which for nonprofits, that was paid on a 990T through UBIT, unrelated business income tax. If you paid that in for that what's kind of nicknamed the parking lot tax, you can amend your 990T to get that refunded. I think the last item, IRS topic anyway, that we wanted to touch on is charitable donation acknowledgements. And this one really has nothing to do with the CARES Act or COVID-19 or anything like that. It was just kind of an issue that we've been seeing, and we thought this was a good audience to talk to and just kind of tell you about the risks of what's going on here. So if you, as the charitable organization, get some of your donations through a third party, so this could be, a donor advised fund, or organizations like GiveMN, they generally, well, if they're taking responsibility, there's maybe some that do it other ways, but they're generally taking responsibility for receiving the donations and then providing the IRS required acknowledgements to the taxpayer. So the end user charity does not need to also provide that acknowledgement. If you do though, because you might want to, it's always nice to send some sort of a thank you or acknowledgement to your donors, because in reality, they're donating to you, right? They're just going through another means, but they want to make sure their money got to you. It should not be the official IRS required acknowledgement with the wording that's required. You can give them a general thank you letter, and that's a great idea, but you should make it clear that this donation was received through this named third party. And the risk is that these could be double counted by taxpayers. So if they get you know, acknowledgement from GiveMN and then acknowledgement from you as the charity, you know, they could possibly be doubled up. And where it's even more of a risk is when it's through a donor advised fund. For one, these are generally bigger amounts. And by the way, donor advised funds have become much more popular since the 2017 tax laws that, like I mentioned before, with less taxpayers itemizing. What some taxpayers are trying to do is group their donations. So they'll give a bunch one year and then not as much the next year. And they can do that by going through a donor advised fund. And so when it's in 2 different years, if the donor advised fund acknowledges this donation in 1 year and then you as a charity acknowledge it in the next year, that's going to be even harder to catch if it's, you know, if it's being doubled up. So this is just kind of a, I guess, hot topic, or one that we're seeing anyway, that we wanted to get the word out there on. So with that, I will turn it back to Tiffany.
Great, thanks, Anna. So in the interest of time, we want to make sure we leave plenty of time for your questions. We just have a few slides here at the end that I'm just going to show you, and you can go back once they're posted on our website, go back and reference them. They're kind of just, you can use them as a checklist, if you will, for have I taken, you know, necessary action during this time, just to make sure I'm taking advantage of everything I can in the business to maximize my cash flows. So this slide just talks through some different strategies that you might use. We do highly recommend, I would just like to highlight the very first bullet point, updating your cash flow forecast. We recommend we have a 13-week cash flow template on our website, but looking at that 13-week cash flow just to predict out and then always keep it rolling every week, to always be looking at your next 13 weeks to really be able to plan accordingly. But take a look at these slides at your convenience later on and see if there's any good ideas in there that you haven't thought about. This next slide talks about deferring payments, you know, contacting lenders, vendors, creditors, anybody to see what kind of deferment schedule you might be able to get on. And then finding other cash, you know, are you working with your donors? If you've had campaigns running and you've got some pledges on the books, are you doing everything you can to communicate, collect on those? Seeing with donors if there's any flexibility and restrictions that maybe have been placed on any assets. And then financial best practices at the end. Again, you can come back and look at these later, but make sure that you're generating regular financial statements to be looked at, not just by management, but also by others in the organization, your board, finance committee, if you have that. And always making sure, especially now during this time of the pandemic, update your current budget and the next year's budget if you're close to fiscal year end. And then this slide just has some links that you can access. That EIDL Advance online application where you go to sba.gov to find that, though it's kind of stale right now at the moment. I referenced a lot of PPP FAQs. Here's a link, you can go read those yourself if you'd like to see that and stay abreast on them. And then our website link for our COVID-19 resources. So you can go reference those anytime you need to. So with that, I would like to invite Nick on back. Been a while, Nick.
I know, thank you so much.
Hey, you bet. He's gonna take over with our Q&A.
So one thing I did forget to mention at the very beginning was there is a thumbs up feature on the Q&A. Looks like some people are already using it, so thank you for that. And what that will do is boost a question up to the top, so it's much more likely that we are going to answer it, and one that I know Anna won't do. So I just want to say thank you, Julie, for a great shout out. So shout out to Anna, honored to be on your first webinar. And I got to say, I think you did awesome. So good work, Anna. But on to the Q&A now. If we could have, actually, let's have Anna come back on.
Thank you for that plug.
Yes, yeah, I know you're far too modest to ever do that for yourself.
Thanks, Julie.
Question on, oh, sorry, these things move around a lot, and I think people found the thumbs up feature, so it's moving, which is fantastic. Thank you for doing that. Are we able to count accrued costs in our forgiveness calculations?
Well, that is one of the biggest questions that we are waiting to hear from SBA. And I mean, Tiffany definitely has a lot more has dug a lot deeper into this, but right now the way it's worded is that it is for costs paid and incurred. So that would say that you'd have to not only, it'd have to be for that period, but you'd also have to pay it during that period. It's kind of dumb if they keep it that way, but they, as of right now, that's how it's worded. So that's why we're actually saying you might even need to change some pay dates and change the timing of when you pay some of your costs, but it should still be costs for that period. But this is one of the things SBA has promised to come out with guidance, and we're patiently awaiting, and it should be any day. And once that does happen, we'll for sure get some information out there, a blog or e-blast or probably a webinar.
Awesome. Thank you. And do you want to do those other 2 shout outs?
Oh yeah, let's see, did they move around? Well, I know one was Propel Nonprofits is in the house, so great, welcome those from Propel. And they didn't ask for this, but I'll give them a little bit of plug anyway. Propel is a great organization that works with nonprofits, and they go to their website because they also have a lot of great resources on their website. Along with one, I don't know if anyone's on from the Minnesota Council of Nonprofits, but I'll plug them as well. In Minnesota, we're so lucky we have just a ton of nonprofits and then a ton of nonprofit resources. So Minnesota Council of Nonprofits also has a lot of great resources on their website. And then I think the other one, like you said, it moves around. Shout out to Teresa Living Center, one of our, well, as Lucy says, one of our smallest clients, offering homeless services to families and single women. They're a great organization. She says, who is small, but one of our favorites. And yes, Teresa Living Center is one of our favorites. So thanks for putting that in there, Lucy.
All right, thanks, Anna. Tiffany, if I could have you come back. I know there's a few specific questions that people maybe got answered later on in the discussion, but it's still good to hit because I think a lot of people are wondering the same thing. Are we able to return funds before the safe harbor date? And can we return a portion?
Yes, I would love to answer that one. So what we know now, and I think maybe Mary had thrown this question out there. What we know now in terms of that safe harbor, that May 14th is really designed for an all or nothing. So if you've got your PPP loan and you've decided that under good faith you're not able to make those certifications, then you need to return the entire loan. If after receiving the loan you realize I can't spend this entire loan amount on allowable uses, or I do have some excess cash I can use to help us, but not excess cash to get me through what I really need to get through. Right now, there's not any provisions for like returning a partial before that safe harbor. You do have the option of hold on to that cash until the end of your 8-week period. And then once you know you don't need it, you could have the option of, there's no prepayment penalty. So you could prepay as much as you don't, as much excess as you still have there, just prepay it. This also would be a good question. Ask the lender and see if they have any clearer guidance from SBA. SBA has not come out and said that there'd be penalty for it. It's been pretty much an all or nothing. Either you make the certification that you're okay, that you need the loan. And I would say if you're uncertain to the point that you think you really need to hold it to make sure, then you're uncertain to feel comfortable to make under good faith the certification that you have economic uncertainty, that the current condition of business operations would justify needing that loan. I think, did that answer both those parts, Nick? I wanted to make sure.
Yeah, I think that definitely helped.
Okay.
There might be a little more follow-up, but we'll go to another one. I'm going to keep you on because it's just on timing and PPP stuff. Oh, one really quick one. Can you define health benefits?
Sure. So health benefits, as we understand it to be, includes the medical insurance, like premiums, employer paid portions of medical, dental, vision.
Great, nice and easy. Now, the payroll is what confuses everyone and us too, I think, is there's this 8-week period saying paid and incurred, but obviously payroll periods don't match exactly when the paycheck comes out. Can you try to talk a little bit more about that? I think there's quite a few questions on that.
Yeah, and unfortunately, I wish I had a really decisive answer for everybody. Yeah. And as Nick had said, we're working through these calculations with our clients, and we are struggling too to help everybody define what period is going to shift which way. The guidance for giving is, also as the borrower, you have to be comfortable with being able to justify at the end of the 8 weeks to the bank what you did. So part of it is as we work with clients, depending on how your pay periods fall, is just making sure, to the best of your ability, that seems reasonable, get 8 weeks into the 8-week covered period. And if that means that you have half a payroll period that really technically is in the beginning of your 8 weeks, if you don't look at that half a payroll period, but you pick up a half on the back end because you paid something early, just document, so that when you go to apply for forgiveness, you can really lay it out for the lender to show them, these are the assumptions we made. Because when we're lacking that clarity right now, that's the best that we probably can do, is put together our situation, document it, and then present it. You might also consider having kind of a backup plan if you needed to just do a calculation in Excel to say, okay, if I need to break down by days for what actually was incurred into that period, and then subsequently paid in that period, you could do kind of a plan B to make sure you have that information. Now, on the back end of your 8 weeks, if you're looking to still need, like if you've incurred a week or a week and a half and you need to get that paid in the period, we do suggest you accelerate paying that payroll to get that
Great.
in.
And 2 follow-ups for you actually is, one nonprofit matches or contributes to their employees' HSA funds. I don't remember seeing that in the CARES Act anywhere, but do we have a thought on whether that counts for the
That's
health?
a great question. And I did not include HSAs when I talked about health on that previous question, but HSAs we are hearing are included. Now we're hearing it not from any rules and regulations per se, but again, that conventional wisdom that's kind of out in the marketplace.
Great. And then one more on the payroll stuff kind of is, when it's talking about being fully restored by June 30th, can you talk about that a little bit more? Does that mean we have to have a payroll run by June 30th with everybody in the door on that day? What do we know?
Yep, great question. So everybody's in a little different situation because your loan funding date might differ from everyone else's. Everybody could fund on a different date. So let's say you funded mid-April. Your 8 weeks is going to be up sometime second week of June, which is long before June 30th, and maybe you haven't restored. So if your 8 weeks is expiring, if you will, before June 30th, and you think you still can restore, you haven't restored, but you think you can restore by June 30th, we would recommend hold off on applying for that forgiveness. Apply for the forgiveness after you've hit June 30th. Now, do you have to run a payroll on that date? I would say you don't, because you should have documentation of the hours worked by your employees, so you can then go back and calculate and prove. The other thing I would point out with that June 30 date is you don't have to take a measurement on June 30th. If you've hit that restoration before June 30th, based on how the law is written right now, that should count for full restoration. So let's say you hit it June 24th, then you're good. Document that, and then you're good to move on with your business operations.
Awesome. Thank you, Tiffany. I'm going to have Barb come back, who's been off for a little while, and I just missed talking to her. So if Barb, if you can find your video, hey, you found that quick. Good job. What if we are over 500 employees? Are employees allowed to stay home to care for children and take care of the e-learning? If there's no one else there, does that qualify under FMLA?
And that is an answer I'll have to look up and get back to you on. Everything in there talks about less than 500. So I haven't specifically looked for if the over 500 have those same requirements to expand the definition. So
well, perfect then. We have the slide up right now. This is Barb Sawdy. If you want to email her directly on that one, well, she'd love to help you out. And that's just a plug for all of us. These are some great resources here on the Q&A slide. They're very happy to help and follow up with specific questions and answers. It's basically what we've been doing for the past 6 weeks. So happy to keep doing that. Stacy, if I could have you jump on. I have 2 questions out here for you. Question on the certifications, and there's a portion that says access to cash. If a nonprofit has 3 months of unrestricted cash needed for seasonal cash flow, can that be excluded from access to cash?
So right now, what I would do is have that included in your impact statement. So what your impact statement is, as Anna said, is a very just kind of detailed of both qualitative and quantitative things that affect your nonprofit. And so I clearly would state that is strictly for cash reserves, and here's why. You could talk about in the past how you've had to use it. And we are waiting still for that further guidance on certifications. They actually have put it in the FAQs that they will be getting back to us before May 14th. So we are all hopeful that that'll help clear up all of our questions on our impact statements and certifications. So I don't have a great, like, positive, this is the for sure answer, but I think if you document it and why you need it, I would feel good about that.
Awesome. Another one for you, are we suggesting a separate checking account for the initial deposit of the PPP, or deposits, depending, and for all the disbursements? Like, do the actual checks have to go out of that account?
Oh, great question. So what we're trying to have everybody do is fund the PPP loan into a separate bank account. Don't get a debit card or checks for that. What you'll do is pay those from the actual operating account like you did before COVID happened or before you got the PPP funds. So it's kind of business as normal as you're doing your payroll and paying your expenses out of the operating account. And then as you gather those documents or get your reports from your payroll company and know the amount that is used or can be used with the PPP funds, you will then reimburse your operating account from your PPP account and keep the documentation as your backup.
Awesome. Much easier than trying to change a bunch of auto drafts to that PPP
right.
fund temporarily. You know that wouldn't go well.
No.
One final one. It is the last question out there, and we do have a few minutes left. So if there are other ones, please post that. Otherwise, we can wrap up after this. Stacy, a good one on the restoration. If we did restore our full-time equivalents by June 24th or June 30th, that person obviously will not have made anywhere near what they made in the past. So are they under the wage reduction if they just didn't get the same number of hours?
So the wage reduction piece is that in a cost savings mechanism, you may have said, okay, we need to look at everybody's pay across the board and do a pay cut. So, right, their hourly wage will have been reduced. Maybe their salary was reduced just to make sure you're conserving funds within the company. It is not on a person by person basis of that 8-week period as to what they made. We're hopeful that you have guided all of them to take unemployment when they're unemployed, and hopefully we're made a little bit more whole with that $600 extra through the CARES Act. And then one thing I wanted to go back to as well is someone had a question. We aren't able to get to our full FTE. One of our employees has just decided they don't want to come back, or they want to come back on that June 30th date. And there is an actual question in the FAQs where someone asked that. And as long as you have written documentation that you offered that employee the job back and they have declined that to you, then you could use that as your FTE count. But just note that that could affect their unemployment benefits.
Thank you for that wrap up. I think, yeah, that looks like it's all the questions. I know a lot of people are going to have them after they digest this. This is a lot to take in. So again, please reach out to the team. We're all ready and able to go into a little more specifics with you. Anna, I think I'm throwing this as a curveball out to you, but why not do that on your first webinar? Could you just do a final wrap up and say bye?
Yep. I will do that. Thanks, Nick and Stacy. And thank you again, everyone, for attending today. We hope you learned something, or even if we confused you, we hope you got something out of it. And like Nick said, we are here to answer your questions. The contact information is on the slide currently, and the slides will be posted to our website along with a full recording of this webinar within 24 hours. So if you missed something, feel free to check back there. And thank you, everyone, and just have a great day.